Selena, I guess there's three potential outcomes here, aren't there? There's a clean Biden win, a clean Trump win, or a complete mess that takes a long time to untangle. So how do markets get in the right position for that?
Well, I think financial markets are basically counting down to 3rd November. But, you know, my inclination is to lean towards the third scenario where it's going to be some confusion in the early days because of the high prevalence of mail-in votes. I think it may be days, if not weeks, before we actually know the outcome. And the markets are going to be reacting to that uncertainty. We are already starting to see a little bit of that in the dollar and also the U.S. Treasury bond market. I mean, we have seen a bit of a steepening in the U.S. Treasury bond market, mainly on the prospect that fiscal stimulus will bring about higher supply concerns. But I think if we get a risk-on bout in November onwards, because there is no clear outcome, and let's say if there's a little bit of unrest, you know, then that could actually imply that there could be a flight to quality. Hence, I'm not convinced yet that this breakout in the 10-year Treasury yield is sustainable, and we're going to see a retest closer to the 1% handle anytime soon.
Yeah, you point out another risk there as well around the stimulus package, what's happening there. I mean, it looks more and more like a political football, and then there's the possibility of a vaccine in 2021, but you know, there's even difficulties around getting a useful vaccine. The setbacks in that sort of field are quite common. But are all those risks really still taking a backseat to the US election, or is the market attempting to price all that in as well?
I think for now it's very much focusing on the U.S. elections. But I think once the U.S. Fiscal stimulus is announced and post-elections, the knee-jerk reaction is likely to pass. I think market players at that juncture may actually refocus on the whole winter is coming theme, you know, where again is a race against time for a vaccine to materialize. We have seen recently that there is a rising and worrying infection number uptick in several parts of the world, in the US and also in parts of Europe where, you know, there are partial lockdowns coming back into play again. So I think our core view really at this juncture is that, you know, post a third quarter recovery bounce, we may actually see growth momentum move into a wobble in the fourth quarter of this year. And a lot of that weakness will probably come through in the services side, as reflected in some of the services PMI, as versus stronger manufacturing momentum. For now, I think it's still a little bit too early to try and price in a 2021 reflation story until we get some of the short-term event risks out of the way.
Well, Selena, you're right on the wavelength of one of our big stories coming into the week from our Treasury team. The headline is The Big Short in Treasuries is showing some pre-election cracks. And you've just laid, I think, all that out beautifully. You just said you can't see a breakout back towards 1% on the 10-year Treasury yield from about 0.82 now. Do you see any chance of a rally if there isn't a blue wave, number one, if people look past a big, you know, resurgence in third quarter GDP in the U.S. and start seeing these cracks that you have just mentioned? Is there a chance that the Treasury yield goes back the other direction and tests some of the lows we've seen in the last few months?
I think it's possible. There could be a couple of triggers that will actually underpin that kind of scenario. I think one is what we have discussed earlier, where there's no clear outcome from the elections and generally there's a flight to quality. Secondly, of course, is that if fiscal stimulus remains at an impasse because there's no clear election outcome and the U.S. fiscal stimulus becomes a first quarter 2021 story instead of a fourth quarter 2020 story, then it's very likely that the Fed will have to step up the game again in order to compensate for the shortfall on the fiscal side. So I think both of those factors probably will point, I think, very highly likely retest, back down to around the 75 basis points or lower scenario. Okay.